very much, Ryan. I appreciate it. And thank you everyone for who has signed up and decided to join us today. It's been a while since we've done a webinar from Mocha, and I was very excited to be able to provide this, provide some clarification, because it is one of those, credit card processing is one of those industries. A lot of people have a hard time knowing exactly what each party does. There are quite a few different, well, we call them the key players, but essentially they're industries. So we decided that this would be a good time to just sort of break it down, show you guys who does what, and just kind of help provide some better understanding of how this all magical kingdom of credit card processing works. One quick disclosure: there was some issues with the PowerPoint presentation. Did our best to clean it up. However, there may be they may not be quite as clean as I would have preferred, and we may do a second recording, but we'll go ahead and jump into it. And as Ryan mentioned, we'll be happy to do a Q&A at the very end. So let's start off just a little bit about myself. Again, my name is Stu Kehler, and I do reside over in Fort Collins, Colorado. I work with Mocha Payments, and I have been, I consider myself a payments industry expert. Been doing this for actually over 12 years now, and I have worked with most of the major processors out there that we will dive into a little bit during this discussion. In that 12 years, I have set up over 5,000 merchant accounts or merchant IDs for thousands of different businesses. I have kind of remained in this industry because I truly do love to talk about this, to help educate, but I believe in sort of a shared education. I love learning from business owners, how they run the business and what works well for them, and also sharing my knowledge of this industry and helping clarify for them, because it's something that almost every business needs these days. So let's go through a little bit what we'll be covering today. In clarifying the credit card processing, we will be breaking down the workflow, sort of how this system kind of manages these transactions, where it goes from one place to another. We are going to be talking about these key players that we mentioned, and we're also going to be kind of doing a very brief history. I'm going to throw that in there because it's going to be important to help simplify the whole thing, and I'll explain exactly why in a little bit. Now, we did have a few other things that I wanted to cover, but I realized after running through some practice presentations that we're going to need to do a part 2 to this. So in our part 2, we will be doing talking about point of sale integrated versus external processing options. We'll also be covering that part 2, the shopping for merchant service providers, compatibility and service offerings, structures and things of that nature. We didn't want this to be running to be an hour-and-a-half webinar. We wanted something a little bit more shortened that people would be able to pay attention to, but we will still have time for that Q&A at the very end. So with that, our very brief history of credit card processing, and I know most people that join this didn't plan on a history lesson, but it actually is very important in sort of understanding how it works today. So technically speaking, it really actually all started back in the 1920s. Most of the first cards were actually courtesy cards issued by oil companies and hotel chains, but to be perfectly honest, these were very simple systems, almost like vouchers. And really, when you look into it and you kind of see where this all basically started, it really wasn't until the 1950s when the idea of a line of credit being accepted at multiple places of business came about. There's speculation of who exactly started it, but most agree that it was actually envisioned by a man called Frank McNamara. And it actually occurred in New York City when he forgot his wallet while attending a business dinner. He was incredibly embarrassed. He the stories told say that his wife did come and brought his wallet, and he was able to pay his tab. But it sparked in him an idea, and that was essentially that there must be a better way that people could go out to eat at restaurants in New York City without having to worry about having the right amount of cash on hand or legal tender. So he started it by finding 27 restaurants to participate in a program, and had about 200 founders and friends and acquaintances that decided to kind of join in this venture. And essentially, this idea grew very fast. The number of members increased to 20,000 by the end of 1950, and they actually had over 42,000 members by the end of 1951. Now, most people in this industry will be able to tell you exactly which card it was, and that is the Diners Club. Here's one of the originals. It was actually a cardboard cutout that was presented for payment, and again, only at restaurants in New York City. And it was a fairly simple system, but one that had never really been thought of before. And so the workflow that was created to allow people to dine and not actually just pay at the time was essentially customers, these acquaintances of his, they applied for a line of credit through Diners Club. The restaurants would obviously have to join this club network in order to accept that form of payment from the customers. And then the restaurants would report the customer card info and the bill amounts to the Diners Club daily. Usually this was done by telephone or handwritten notices. And then the Diners Club actually would go ahead and they would handle the settlements from customers, receive payments from all of them at the end of the month, and then make sure that those payments got distributed to each of the restaurants for the settled amount of the bills. And all this was done with a fairly significant, at the time, 7 to 10% fee for that service. And so I will have to hand it to Frank that it's for most to be able to convince restaurants to join up with this, get his acquaintance on board. He would have had been a man that could sell sand at the beach, I would say. But once that started and it took off and became successful, as you can imagine, other businesses jumped in. The American Express company, which actually had been around for a bit, decided to create its own card in 1958 and became the very first one to be accepted outside the United States. One of the original signs and cards here. And Bank of America was actually sort of the next in line. Now they created a card, it was mostly for California, but they implemented the first idea of allowing balances to be carried forward over to the next month. So prior to that, Diners Club and American Express always required that those consumers settle out their bill at the end of every single month. Bank of America had the idea of just allowing for a fee those customers to maybe pay it off over the course of 1 or 2, 3 months. So that card that they created was the Bank of America card. And some people will very likely recognize the color schemes on here because that actually did become rebranded as Visa in the future. Now, things kept moving, as you can imagine. These networks began to grow, word got out there. 1967 to 68, the Interbank Card Association formed and was rebranded to MasterCharge in 1968. Again, very recognizable color scheme here. This was one of the first ones out there that wanted to become available worldwide. Now, American Express hadn't beat to that, but they knew the idea of being able to expand this network. And so we can keep going. This continued. Discover was moved from there, but essentially what's happened is we've gone from, well, this very classic sign of the three majors to today, where you can choose from a plethora of different payment options, networks. Now, of course, not all of these are card networks. We have now things like digital wallets that are available to people, things like tap and pay and stuff. Some of these do sort of blur that line between the card networks because they will oftentimes require a credit card be attached to their system or to your digital wallet, and the transactions processed through that. But this is essentially what we have grown to. And the way it's done that is what started off with the simple Diners Club. There are quite literally hundreds of different card options now available. There are really only about 85 active card issuers in the US, but the amount of the options out there for customers is significant now. What started as 27 restaurants, we now have over 12 million businesses in the US that are set up to accept a variety of payment options. Now, of course, what started as handwritten charges and telephone requests, getting the information from the business over to the network and making sure that things got settled up, has, of course, improved drastically. Everything is now done with a near instantaneous digital authorization and approval, allowing the information to come right back, allowing the business to know that this card is valid, the authorization is going to go through, their payment will be accepted. And what it was once a month payout has now come to next day or instantaneous settlements to the business, making sure that they get funded as quick as possible, and then allowing them to put that money back into their business. And with the competition and all this growth, well, thank God for, and luckily for most people, merchants out there, that 7 to 10% fee for the service has gone down drastically. It's now between about 2 to 4%. So the reason I bring up this sort of history is that the important aspect of this whole thing really came down to the Diners Club workflow, how this process began. Essentially, customers applying for the credit line, restaurants joining in, the restaurants having to communicate and report that back to the Diners Club, and then the settlement process. So if we simplify it, what's being done here is an issuing of line of credit, having essentially this network, these businesses to accept that form of payment, a communication and authorization system, and facilitating the payments and funding. Now, that brings us to the modern workflow. And I have to chuckle a little bit because I thought the best way to do this would be, well, let's see what kind of visuals, there's got to be some pretty decent graphs that help explain the current modern credit card processing workflow. But I recommend you try it because you will get a laugh at least some of the things that you're going to see out there, doing its best to explain and show sort of how this data is communicated from the merchant through these systems that are in place, getting the authorizations. This is just the authorization. You can even get into the full authorization and clearing settlement graphs. And again, I would not expect anyone to look at this and feel confident that they know what's going on. It's, as some people oftentimes tell me, it's clear as mud. So what I would say here is let's go back to the reason I brought up Diners Club. Let's look at that workflow and we can kind of see the key players here and maybe be able to visualize this all a little bit better. Providing the lines of credit, what was once just done directly through Diners Club is now done through what we call the issuing banks. Having the business to accept it, these are these payment networks. Diners Club jumped out there, got the 27 restaurants. Well, now we have multiple payment networks that work to try to get as many businesses on board across many countries, essentially building that brand and letting people know that if you go with them, you can actually go ahead and make your payments and use your line of credit at a variety of stores or businesses or organizations. Now, the communicating and tracking of these transactions, we now are called the processing or the processors, and then facilitating the payments and the funding they have to get from those customers' credit lines and their issuing banks back to the merchants. We've created an industry essentially for every single one of these. And the reason that we had to create an industry is just how much it's grown. There are actually, as of 2022, over 1 billion lines of credit or cards in circulation at the moment, compared to those first 200 that got started with Frank when Diners Club came up in 1950. Accepting payment is now done in over 200 countries on most networks. Having the availability to not just go to a couple of restaurants, but to be able to accept that form of payment generally to almost anywhere that you go, making it very, very convincing for consumers to jump on board and wanting to join in. Communicating and tracking, we're now about 678 billion transactions a year. You can only imagine that those first 200 maybe did a few thousand or something like that. A significant drug in there, and obviously we had to create an industry just to be able to handle all that. And then facilitating the funding of those, for that 678 billion transactions, we're looking at about $3.2 trillion that are run through this system in this industry. And so now we have these acquiring banks that kind of help facilitate that funding. There are a few new parts that were not really in that original workflow, just based on the simplicity, but with growth, there was the need to encrypt, tokenize data, making sure that things stay safe and secure when everything's being transmitted back and forth between the various parties. So there are gateways were created for that. And then merchant account setup and support, there are about 12, as we mentioned, 12 million businesses that are now accepting credit cards. So in order to help manage that, facilitate it, set up those businesses, support them, an industry of ISOs was created as well. So let's dig into these a little bit. Then we'll circle back up to our workflow and see if we can find a better way of showing how all this works. So let's start off with these issuing banks. There are about 200 financial institutions that actually issue credit cards these days. Now, of course, there are a few major ones out there, but we can go ahead and see that the growth is pretty significant. This only goes back to 2012, but the graph has just continuously been moving up and up and up. The key players have, for the most part, been these big ones here: Bank of America, Chase, Citibank, American Express. But as we've seen the growth in digital wallets, things like that, there are quite a few competitors that are sort of moving up into the market race here. Now, the key thing here too is also not only about the volume, but the circulation of cards. So big banks, Chase, Capital One, Citi, Discover, these all really want to try to make sure that their cards are out there in the consumer's hands. So they make them as available to people as possible. Almost anyone who has received any mail has received at least 100 offers for getting a new credit card. A lot of money is spent from these card issuing banks to get consumers on board, get their lines of credit, get them to accept those forms of payment. And if you open up any type of bank account, you're going to be offered a debit card or something of that nature that allows you to also accept payment in these networks here. So how are these guys a key player? Well, approving the lines of credit for consumers is obviously going to be a big part of that. They do also play a big part in handling the chargebacks and disputes as well. So in the cases that there is a dispute between a merchant and a consumer that has bought something, the issuing bank is one that really wants to make sure that things were done properly and that the money is going correctly to either the merchant or remaining with the consumer if things were not done correctly. They work with the payment networks to sort of increase the availability as well. So they're looking, like we mentioned, to try to get the name out there. They oftentimes will have multiple card networks in their system. So you can get a Chase Capital One card or Chase Visa card. You can get a Chase American Express. You can also get MasterCards as well through them. And the same goes with pretty much every major bank out there. They want to help build those brands and get more consumers on board, and that will allow to get kind of more businesses on board and sort of build that industry. So somebody that's going to need to be part of. Now we go to the next part here, payment networks. So starting with the Diners Club, well, they were accepted by 27 restaurants. Now this has had to grow. The major ones out there we all recognize, Visa, MasterCard, Discover, and Amex, are still sort of the high rollers, but there are digital wallets like PayPal and Apple Pay and Google Pay that have stepped in. Some of these do kind of blur those lines, as I mentioned, because you will oftentimes have one of your Visa or MasterCard credit cards associated or linked to these systems. And there's going to be the store specific cards as well. Target Red Card, Kohl's Card, things of that nature, things that are specific to a brand or a company. But this is where, we have that just plethora of options out there. So each and every single one of these payment networks are looking to expand their brand. They're looking to try to make sure that they can get as many consumers on board along with businesses on it, so that the whole thing works together. If you choose that you're going to pay with my card or my network, I want you to be confident that you can use that just about anywhere that you want to shop. So when we look at these, as I mentioned, the major ones out there, Visa, MasterCard, American Express, and Discover, will kind of continue to be the high rollers in this. And they're going to continue to own it and build it up a little bit, but don't be shocked when you start seeing some of these these digital wallets and some of these smaller brands kind of jump in and start taking a little bit more piece of the pie there. And then we also have sort of these increases in volume. How we kind of want to scale these things here is just since 2020, 2024, just the significant increase in the amount of volume and billions that have just sort of gone through each and every single one of these networks, just sort of showing what's been done just in a short 73 years. Now, these guys are obviously extreme key players in this, not only just the fact that they are the darn brand, but they are building sort of this availability. But the other thing too that people don't realize is they are setting what are called the interchange fees. We've dived into interchange fees in some other webinars that you guys can click on and select to watch, but they are essentially the rates that merchants will have to pay or get paid back to those card issuing banks whenever a credit card is accepted. And these networks, Visa, MasterCard, they are extremely the dominant ones in trying to set those fees, because they're trying to find that balance. They do need to make sure that businesses, card issuing banks will continue to accept these cards. And so businesses will be in the network. Fees have to remain low for businesses want to continue to accept them. A lot of them, American Express is a common one that sort of has adjusted their rates and fees over time to help balance getting more merchants on board with their network, but also making sure that their card remains uh, um, the best for their consumers. As we all know, there are going to be those rewards and points and structures that come in to try to entice consumers, and all of those are paid for with many of these fees. When it comes to some of the other brands like Visa and MasterCard that come from multiple issuing banks, they have to kind of regulate. Well, there's going to be a certain rate attached to each card that needs to go back to the card issuing bank. They negotiate with them to make sure that those banks really want to continue to be in that network, while still balancing the cost and making sure that merchants are going to remain on board with them. And then the times that these networks will oftentimes kind of go back to being a high-level transactions disputes. And what that means is, even though chargebacks will oftentimes done strictly between the card issuing bank for the consumer and the merchant, the processor, when there's high-level ones, they will oftentimes have the network come in to sort of help mediate, to dictate who's going to be in discernment of that money. So now that we've kind of covered issuing banks, payment networks, we are on to processors. This is going to be a little bit tougher because the graphs for these change significantly. So these processors, there were dozens of them about 10 years ago, and they have been sort of in a constant state of acquisition. A lot of them have sort of merged with each other in order to essentially try to be the largest out there. So just in the last few years, Fiserv has bought First Data, FIS bought WorldPay and then has since sold it. Global Payments has bought TSYS. And again, these mergers and acquisitions are sort of done to try to build those networks. And what it also has led to is a lot of smaller networks to want to jump in and sort of be a part of this, because as we all know, sometimes businesses or organizations get too big, things begin to support maybe kind of falls off. And so people find a market where, well, we can do a better job at a better cost, or we can provide better service. And so these sort of mergers and acquisitions has shown sort of a growth in smaller processors sort of jumping in and providing new options to consumers. So what do the processors do? Well, we are, again, communicating and tracking 678 billion transactions annually. So they are essentially going to be acting as a mediator between the merchant and the issuing bank. They're key in sort of building these gateway connections and hardware integration. Merchants these days do need to make sure that if they decide on a point of sale system or specific software, that's going to actually work specific with that. So these processors have to build those partnerships, allow those sort of connections, and then make sure that things are working fluidly. As we all know, reliability is key in this industry. Any merchant that's ever accepted payments, if things go down, it does cause trouble. So these processors work very hard to remain as stable as possible and making sure that things are running smoothly, transactions are going through, and settlements are getting to their bank accounts. Now, they are also an important aspect in security as well. With this much money and transactions and data moving back and forth, the amount of fraud and concerns of transaction or data being stolen has gone up significantly. So They provide security solutions, and they're also a key factor when it comes to compliance, making sure that merchants and businesses are following those PCI DSS rules and regulations, and basically mitigating the amount of potential fraud in their business. Now, acquiring banks, this is another sort of, they fall into a gray area with a few different options out there, because when it comes to the facilitating and funding, let's kind of bring ourselves back to that Diners Club. They handled all that. So not only were they the card issuing bank, not only were they the network, not only were they the processor, sort of handling the handling those communications, but they were also making sure that they were receiving the payments from the consumers and funding the merchants. Well, with $3.2 trillion a year, it's now an entire industry to make sure that that funding goes through properly. There are still networks out there, though, that sort of handle this aspect of it. American Express is probably the more common one, where they oftentimes are doing the funding directly to the merchants, although they have branched out. They now do work directly with processors to allow for faster funding through them. And there's some blurred lines there, but they're still key players in this. So as far as facility and funding 3.2 trillion, they're also ones sort of helping to set the risk parameters on these accounts. So they need to make sure that that the businesses that are owning and operating in these networks, processing these transactions, are doing things correctly. But also on top of that, they have to determine what's going to be considered qualified, prohibited. They essentially want to do their best to mitigate the risk and know that money is getting to the right place. And if there is something like fraud being committed or a dispute, they need to make sure that that money is put into the proper area, whether it's in an escrow account until things get resolved, or if it was fraud, that they help sort of cover that and make sure that it doesn't happen again. So a company or an industry that's going to be required, and again, not always the case where there's always going to be a separate acquiring bank than a processor, but it's one that is going to be needed in order to make sure that 3.2 trillion is sent to the right place. Now, as I talked about, that kind of covers the main Diners Club workflow, but things have changed. With the amount of communication required now, we've had to encrypt data, tokenization to handle sort of these authorizations and returns and things of that nature has been required. But on top of that, making sure things are remaining compliant is extremely important. So the gateway industry is a technology industry for the most part. They were developed to, again, encrypt this data, but also they are vital in sort of this integration between these processors and the software systems. Most businesses these days would have a very hard time operating without some kind of point of sale, inventory management system, something to sort of track their clients, be able to provide information. And the key aspect is making sure that all this sensitive data isn't being saved or stored in that system where it could be retrieved or used for fraud purposes. So gateways sort of jump in to make sure that at the point of sale, whether it's in person, whether it's through an online store, that data and that information is going to be sort of encrypted, securely transmitted through the entire system for the authorizations and settlements, and then basically reduce that scope of compliance for the software. So they facilitate these transactions. And then there is sort of these key differences between hosted and non-hosted gateways. Just to touch on it, hosted gateways are essentially when a user clicks on, just as an example, a content to purchase, they get redirected to a payment service page. So sort of separated from the initial experience. With these type of hosted gateways, card information is typically not stored or captured, but these are often less customizable for the merchant or for they want to make sure that all this information is secure, and so they offer less customization. Non-hosted does allow the users to sort of enter their information or do their sale directly. It does usually allow for sort of fixed or reoccurring payments, very important for industries that do subscriptions and things of that nature, where they want to do a card on file. The information still gets encrypted for safety purposes, but allows that sort of tokenization and experience where the customer may not have to re-enter their information every single time. And then it does offer sort of an easier customized checkout experience. The customer sort of remains on, just if we use the online web page as an example, they remain on the page for that checkout rather being redirected, and just makes for sometimes more user-friendly in that regard. But there are, again, some of these areas do get blurred depending on the gateway and the functionality for them, but these are sort of the general standouts. Now, last but not least, the ISOs is another sort of not part of the original workflow when you had such a simple setup as Diners Club, but one that has become absolutely necessary when you're talking about 12 million businesses in the US accepting transactions. We all know that credit card processing is absolutely vital for the retail businesses. So what they are key players in is assisting with these merchant account setups and processor support. When you assume a processor is oftentimes handling, millions of merchant accounts, they really aren't going to be able to provide sort of a dedicated support directly to every single merchant out there. So these ISOs sort of are allowed to be that the intermediary. They know the merchant, they know their setup, and providing the proper support in case there's ever issues or questions. They also can do things like the gateway integration credentials, or occasionally sometimes the credit card terminal needs to be ordered. I do like to specify direct to processor on that, because in most integrated point of sale systems, something we will cover in the part 2 of this, is those are oftentimes those standard pin pads for the integrated systems are not injected with the actual merchant account information. They're injected with the gateway. So we'll cover that in the next one, but essentially sometimes people need standalone devices that just go direct to processor. Those ISOs can help get those usually directly from the processors or from a buying group at a lower cost. Now, merchant account management assistance is always very important. Any merchant that's ever had issues with a settlement, maybe double authorizations, things of that nature, these ISOs can sort of jump in and provide sort of direct assistance as communication with the processors to find out what's going on, where's the money. If there was an issue with the risk assessment, getting those handled directly. And they also do the pricing rates and fee negotiations with the processors, because they want to make sure that every merchant's different. A lot of times things are handled directly by the amount of volume that a business does or the number of locations. So they can really kind of work to make sure that the best cost is in, the lowest fees are getting to the merchant for each merchant account setup. And then PCI assistance. Although merchants are responsible for their PCI compliance directly, any ISO that handles their merchant properly, they know their merchant, they know the business, and they know the setup. So they can provide some guidance and assistance with that to make PCI compliance easier for them. And so we've covered these key players. I won't go through these particular workflows. Instead, I'm just going to do a workflow for authorization now that I think will be much better. Essentially, when we talk about a transaction being run, this sort of the merchant, let's use the example of a consumer walking in. They're checking out the point of sale system. So essentially, that point of sale is going to be injected or work directly with a gateway. It initiates that payment by sending the request to the gateway, and the gateway then secures or encrypts that data to the processor, making sure everything's working smoothly and securely. The processors we talked about, they're the facilitators of this transaction. So, we're talking about many different networks, many different issuing. So they're going to go, they essentially work through that, provide the routing to the acquirer, the bank out there that's going to be handling the risk and the funding. And then the acquirer works directly through that specific card network, whether it's a Visa, Master, Discover, digital wallet, to get to that issuing bank of the consumer. So we have that full connection from beginning to end, the merchant to the line of credit at the issuing bank. At that point, we have this sort of, again, almost instantaneous response back. The issuing bank will approve or decline the transaction, assuming that funds are available, the card holder's in good standing, that transaction is approved, and it works through the bottom, cut clockwise, right back through that workflow. The card network routes the approval denial right back to the acquirer. The acquirer communicates to the processor, and the processor sends the approval to the gateway, which then comes up on the device at the point of sale for the consumer as approved or declined. And so we now have our modern card authorization workflow. The funding process and settlement, as we talked about, has gone from being once a month to now almost instantaneous or usually next day funding, where all those authorizations throughout the day get settled, and that communication gets sent through the workflow essentially right to the acquirer, where they go ahead and make sure that the funding gets to the merchant's bank account and they continue to operate as they should. And I'm going to go ahead. We're gonna end on that note. I know there's going to be some questions on this, and we would absolutely. I'm excited to do our part 2, where we can really dive deep a little bit more into some of the integrated versus non-integrated processing options, and we're going to be going into some of the things to watch out for when you're shopping for processors. But for now, Ryan, I would love to open it up to some Q&A.
Thanks, Stu. A lot of great information there. I did just want to mention that for any RCS customer who's on the call, account managers will be reaching out to you if you have further questions or you want to discuss payment options. But if you have questions right now, we'd love to hear them. Please fill out the Q&A or the chat. Erica would like a copy of the presentation. I will be emailing everyone a recording of the webinar if you are registered or if you're on the webinar right now. Stu, didn't they just recently, I don't know if it was a law or if it was some sort of regulation that they were trying to pass to allow banks to issue payments like instantaneously? Wasn't there something in the news about that recently?
So it's the FedNow system was sort of released, still being implemented, and it's being, going to be seen as sort of a competitor to some of the ACH options out there, or I guess you could say in conjunction with. And you're right, it's the idea of allowing sort of a bank-to-bank transfer of money for faster and cheaper than the current rails that are in place. And it's I'm watching with a close eye, because it's one of those things where many other major countries out there that have implemented sort of a statewide system like that, it has become extremely popular and sort of taken kind of in many ways, sort of a market share from these other networks out there. So the difference being is that it's not a credit line as much. It's really kind of coming right from your bank account, directly to payments. So I could see it being a great option for wholesalers that are looking to get fast payments. Most people don't deal with checks these days, but offering another option for payment directly. But it will be hard pressed to get most Americans away from their lines of credit that are out there. The records right now kind of show that the average American has 3 to 4 credit lines or credit cards currently. And sort of as you can imagine, being able to buy now and pay later is very popular. So I don't think it's going to be overrunning everything, but it will be something that merchants will want to consider to offer should it get popular enough.
Yeah. Kim had a question about having an account manager reach out to her. I will have somebody reach out to you today, Kim. Mark is wondering if the bill in Congress addresses any of the costs for merchant fees.
So there are actually quite a few out there, and there have been many that have passed to help regulate them. Probably the most popular one is the Durbin Amendment that was passed that basically required that all federally regulated banks, so those large ones that in the highest volume, were required to only be able to charge an interchange of 0.05%, 22 cents for debit card transactions. And there is a lot of merchants are pushing hard to obviously keep the costs down. The networks are working hard to try to find the happy medium. But there are absolute bills in Congress. I just haven't seen any lately that are really going to be having a strong impact on it. Might be able to blame some of that on the lobbying, but it's going to be one of those where you're going to have to get both major parties on board in order to get some of those passed through.
Thanks everyone for your time. Thank you, Stu. And we're looking forward to part 2.
Wonderful. Thank you so much for the opportunity. Appreciate it.
Thanks everyone. Bye.